Breaking news, folks. Bitcoin spiking after Bloomberg reporting that the SEC won't block a Bitcoin Futures ETF. Welcome to First Mover, your first global look at today's action in the Bitcoin blockchain and digital asset space. I'm your host, Christine Lee. And joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewiton, as well as Managing Director of International Content, Emily Parker. Hello, Emily and Lawrence. It's certainly a green day today.
Yes, it is. And then some.
Checking in on Bitcoin. The CoinDesk Bitcoin price XVX index currently trading at 59,300 and change. Bitcoin is up about over 3% over the past 24 hours. And the CoinDesk Ether price ETX index at 37.71. ETH is up about 1% for the day. And the CoinDesk DFX DeFi index right now at 597. It's just slightly up about 16 basis points. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, I mean, just shy of 60,000, a lot of selling pressure out there, Lawrence, but certainly this news of a potential Bitcoin futures ETF getting tacit approval from the SEC is giving the markets a bounce.
Yeah, look, there's been some talk of an ETF swirling for a few days now. And there's speculation that at least some of the rallies that happened earlier this week had to do with maybe some of these institutions buying futures. Because if there is an ETF, it's potentially going to be in the futures market. It's something that's related to the futures, is what Gary Gensler had said. So there was some indication that at least there was some activity in the futures market. It could have been those institutions themselves prepping themselves for something happening, or it could be speculation that something was going to happen. So either way, that is potentially at least some of the catalysts as to why we got so high in days before this report.
Emily, what are you watching?
Well, I just want to see what's going to happen next week because, there is some disagreement among analysts about how an actual Bitcoin futures ETF would affect the market. I mean, in theory, we see the price already shooting up. In theory, it should shoot up even more. But there definitely is also that idea out there that this could be a kind of buy the rumor, sell the news sort of thing. So I'm really curious to see what happens next week with Bitcoin's price.
Absolutely. And for more, let's check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk, the State of Crypto newsletter. Good morning, Nick. So maybe you could break down for us, what is the process for getting an ETF approved at the SEC, and why is it more likely that we might see one happen as soon as Monday?
Good morning. So, this actually whole thing began months and months ago when some of these wannabe issuers filed their first forms with the SEC saying, we think that the market can support a Bitcoin exchange traded fund. We have an exchange partner such as CBOE BZX or NYSE ARCA, and we believe that we could offer a safe regulated product. And the SEC has been reviewing, I think at this point they're up to around 40 different proposals for both spot market-based future ETFs and futures-based ETFs. And it's not just for Bitcoin at this point. There are applications for Ether and Ether futures. And I think just this week there was an application for some kind of NFT-related ETF. So the paperwork began months ago. SEC has been reviewing. And under current law, what has to happen is the SEC commissioners and the staff have to meet and say, we think this is safe. We are not going to oppose it. So there's no official approval here. What happens is after a certain period of time, the SEC can choose to either reject or, ask for more questions or delay a proposal. But if they do nothing, then the proposal automatically becomes effective. And it seems like that is going to be what's happening here. We have heard that the SEC staff and commissioners are inclined to allow certain futures-based ETFs to go effective next week. And this could begin, the deadline we're looking at is Monday. Presumably it might take a little bit of time for these products to actually launch. So, I wouldn't expect to see any products begin trading on Monday, but what we might hear is a company might come out and say, hey, the SEC has not opposed our application. We're going to, we've been deemed effective. We will launch soon. And that's really kind of what we're looking out for at this point.
So, Nick, it wouldn't be just one, right? I think we talked about this earlier, that it would be more than one, just so that the SEC wouldn't show favoritism. Is that correct? And if so, which ones are more likely to happen?
Yeah, so the SEC isn't obligated to, give multiple ones the green light. And because of the process I just described, if a company applied even, a day before another company, then that company will probably go effective more, sooner than the other one. But what it looks like will happen is the SEC is probably going to, give a couple entities, maybe two or three, the, tacit green light and say, we have no problem with this, do your thing. And so far, the ones that Bloomberg named were ProShares and Invesco, and I think we're looking at a couple others, such as Valkyrie, that have also filed within roughly the same time period. And those are kind of the names we're looking out for. The other thing the SEC might do, and absolutely no guarantees here, is they might look at some of the companies that filed, day, 2 days, 3 days later, and say, we think that your product is similar to this other thing that's going effective. We are okay with you, being deemed effective a little bit early, so that they do launch simultaneously. I have no idea if this is actually going to happen, or what the specific process there is, but that is another possibility that's been floated to me. To ensure that there is no one single winner that's taking up all of the volume, all of the fund inflow, and make sure that it's a competitive product.
Nick, just zooming out for a moment, how significant is this? I mean, people in the crypto community have been talking about an ETF forever. Of course, this is a very specific kind of ETF, but just basically, like, how big a deal is this? Or is this just something that was just a matter of time?
I think it was, to some degree, it definitely was just a matter of time, but it still seems like a milestone of sorts. I remember back in 2018, we were following ETF applications, and at the time, the argument was, because of the way an ETF trades, meaning you can buy shares through, for example, your TD Ameritrade app, or another retail popular stock market app. The idea was you could buy shares of an ETF and gain exposure to Bitcoin very easily. All you'd have to do is log into your app, buy a couple of shares, boom, you're done. I feel like that argument is not as strong these days, because now Cash App and Venmo, for example, allow you to buy Bitcoin directly. So if you're looking for that easy on-ramp, then you do have alternatives. But what a Bitcoin Futures ETF still does provide, or will provide rather, is the opportunity to buy into something that is regulated by a federal agency and has pretty strict oversight and compliance requirements. So if you're buying an ETF, it's not because you are interested in Bitcoin per se. It's because you're intrigued by it and you want exposure, but you're not 100% confident in buying it through an exchange or directly because of whatever issues, whether that's cybersecurity concerns, whether that's just volatility concerns, or just the fact that exchanges tend to go down every time there's a lot of market activity. That's maybe why you'd want to buy into an ETF. So from that point of view, it's significant because it is a huge expansion or theoretical expansion of the possible market for Bitcoin.
Excellent. All right, Nick, we'll leave it there. Thank you so much for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, speaking of ETFs, last month, Bitwise Asset Management filed for a Bitcoin Futures ETF and recently filed for a physically backed Bitcoin ETF, which would trade based on the price of actual Bitcoin rather than Bitcoin futures. Joining us now to discuss is Matt Hougan, Chief Investment Officer of Bitwise Asset Management. Hello there, Matt. Thanks for joining us. Quite a day for the ETF industry. Your reaction initially to the potential of a Bitcoin Futures ETF finally getting through the SEC?
I think it's a great day for crypto. It's a great day for the industry. I think we're all very excited about it. We've been waiting for it for 8.5 years. The reason it matters is that there's a whole class of investors, professional investors, financial advisors, financial planners, who aren't able to access Bitcoin easily today. It doesn't pipe through their systems. It doesn't settle with their custodians. And these people control the majority of wealth in America. A ETF, a Bitcoin ETF, even if it's a futures ETF, which is imperfect, allows them to access this market. You know, if you look back over crypto over the last, let's say, 18 months, we've had a series of 0 to 1 moments. We had pre-MicroStrategy and post-MicroStrategy. We had pre-Paul Tudor Jones and post-Paul Tudor Jones. We had pre-El Salvador and post-El Salvador. This is another one of those 0 to 1 moments. This is opening up crypto to professional investors, and it's actually a very big deal.
So, Matt, are you looking to do futures-based ETFs, or are you still trying to do a spot market ETF?
We're looking to do both. We have a filing for a futures-based ETF, which is on a calendar to go effective if the SEC doesn't object by the end of November. We think most investors would be better served by a physical or spot Bitcoin ETF. You avoid issues like contango, you avoid issues like trading slippage, you avoid issues like position limits. A futures-based ETF is not going to track the price of Bitcoin perfectly over time. It'll be great for short-term trading. It may be better than other alternatives that exist in the market today, but sort of the platonic ideal of accessing the Bitcoin market through an ETF structure is a physical ETF, and that's why we filed for that. So we'll do a futures-based ETF if that's all we can do, but long-term, the money, the interest, and the best service for investors is going to come through a physical ETF.
Well, Matt, maybe you can explain why a Bitcoin futures is more palatable for the SEC rather than a spot Bitcoin ETF.
Yeah, I think you have to look at the SEC and say they're taking a crawl, walk, run approach to moving crypto into the ETF ecosystem. What's the smallest increment that they can do to get us from no ETF to an ETF? That's a futures-based ETF. Futures are regulated. They run through the 1940 Act, which is a more robust investor protection act than what physical ETFs would do, which is run through the 1933 Act. So they're taking the smallest step possible. The next step after that would be a physical Bitcoin ETF. And then ideally, we'll see the market open up to cover Ether, to cover other assets, to cover an index-based approach. That's what investors ultimately want. Now, even as I say that investors would be better served by a physical ETF, which I think is very true, I think you have to applaud regulatory courage when you see it. You don't see it that often. We've been waiting 8.5 years for a Bitcoin ETF, and it looks like we might get one by tomorrow, and that's going to be a great thing. So it's the smallest increment. We should applaud them for doing it if we in fact get over that hurdle. And then we're very excited to move forward to the next iteration, which is a physical or spot Bitcoin ETF.
So, Matt, has Bitwise or any related entities been in the market to buy Bitcoin futures ahead of the potential approval?
No, Bitwise, of course, is primarily a crypto index fund manager. We manage the Bitwise 10 crypto index fund. We're just seeking to get people exposure. But you can look in the futures market, and I think you see signs that institutions, hedge funds, and others are getting into the futures market ahead of the possible approval of an ETF. Examples of those signs: yesterday, the CME market did $4 billion in trading volume. That was 4x the trading volume on Coinbase. It was more than the trading volume on Binance. Right now, the October future is priced at $60,000 against Bitcoin trading around 53. That's people putting buy pressure on that front month contract that these futures ETFs are going to have to buy. So Bitwise is not doing it, but you can look into the market and you see people doing it. You see people positioning ahead of what is now most likely looking like an approval Monday or Tuesday of next week.
Matt, can you break down a little further for us, though, this logic, which I think is a little bit opaque to some people, about why a Bitcoin futures ETF is more palatable than a physical Bitcoin ETF, in the sense that my understanding that the SEC is concerned about things like market manipulation, price volatility. Like, wouldn't those same concerns also apply to some degree to a Bitcoin futures ETF? Maybe it's just my own misunderstanding, but I don't quite understand the logic.
No, you're absolutely right. I'm going to put on my old ETF hat. I was the CEO of ETF.com Futures-based ETFs and physical ETFs go through different regulatory pathways. Physical ETFs go through the 1933 Act process. As part of that, you have exchanges having to file a 19B4, which, among other things, has to show that the underlying market is not subject to market manipulation. 40 Act product, like a futures-based ETF, go through an entirely different regulatory pathway. And there's actually no requirement for an exchange to file a 19B4. As we've been discussing, it just goes effective after 75 days unless the SEC objects. So there's actually a slightly different regulatory standard for 40 Act ETFs, which are futures-based ETFs, versus 33 Act ETFs, which are spot ETFs. Now, in the end, they're giving exposure to the same market. Right, the futures product settles to the prices in the spot market. So they're giving exposure to the exact same thing. And you're pointing out a peculiarity, which is you would think the market manipulation standard would apply to both. But those are different regulatory structures. There are additional investor protections in the 40 Act that the SEC is looking at. And again, from abstracting away that regulatory complexity, I think the right way to think about it is crawl, walk, run, right? It does follow the rule of the regulatory law, but I think there's a bigger sort of philosophical thing at stake, which is let's do the smallest thing possible.
Thanks. That was actually a very clear explanation. I really appreciate that. So just to follow up on a point that Nick raised, like back in the day when everyone was like really excited about an ETF, it seemed like this was really going to be an on-ramp to more sort of like ordinary investors. But since then, there's been a lot of progress. It's become a lot easier for people to access the Bitcoin market, not necessarily going through an exchange. So other than kind of like the symbolic significance of this here, like how is this really going to open this up to a new world of investors? Because it seems like most investors who want to get into Bitcoin, even if they don't want to go through an exchange, still can.
It's absolutely going to open up to a large number of new investors. I'll give you an example. If you're a self-directed retail investor, right, if you're managing your own money, you're totally comfortable opening a Coinbase or other exchange app and making that allocation yourself. But most of the wealth in America, 40% of all the assets in America, are controlled by financial advisors. I'm at a conference in Boston right now. I just spent 2.5 hours yesterday on stage talking to 100 financial advisors about crypto. None of them are allocating for their clients, or very few are still allocating for their clients because it's not easy. They're not allowed to allocate in an app. It doesn't report into their reporting software. They can't charge fees on that. So it's absolutely true that self-directed retail investors are able to access crypto easily right now. There are a lot of great choices. Financial advisors, who again control about 4 times as much wealth as retail self-directed investors, are left with difficult options. They can come to Bitwise and buy our crypto index fund or our Bitwise Bitcoin fund, but they have to do it as a private placement with individual paperwork. They could buy GBTC or BITW, but then they're coping with the potential for premiums and discounts. So for this group of investors, which again, I can't emphasize enough, is 4 times the size of self-directed retail investors. For this group of investors, an ETF is the first and easiest way to gain exposure with the push of a button, instead of having to go through a series of hoops or deal with other imperfections.
Matt, former SEC Investment Management Director Dahlia Blass has warned against 40 Act funds back around in 2018. I wonder what has changed since then. Also, just quickly, your CME price discovery report that was released, I believe, an application yesterday. Bitwise claimed that most price discovery for Bitcoin is on the CME and not any crypto exchange. I just wondered, that sounds like an incredible result, and maybe you could quickly explain those.
Yeah, that's what's changed. What's changed is the CME market has become the most important Bitcoin market in the world. That's what we dropped 150 pages of research to the SEC and published it online, showing that the place where price discovery occurs in the Bitcoin market is in fact on the CME market. That's where institutions are allocating to crypto. It has huge trading volume. The reason that's important for regulators is the key objection to a Bitcoin ETF in the past is that you couldn't protect against market manipulation. If market manipulation occurred in the spot Bitcoin market, you couldn't surveil it and correct it. If the CME is the leading source of price discovery, well, all of a sudden you can. big picture, this has become an institutional market. That's a process that's been taking place over the last 5 years. But the fact that the SEC appears to be comfortable moving ahead with a Bitcoin ETF as early as next week shows that there's a recognition in Washington that this is not a retail plaything. This is an institutional market. It's a legitimate asset class. And at least now we can help investors get exposure to it.
Matt, appreciate your insights. Very thorough, very exciting space to be in right now. Bitwise Asset Management CIO, Matt Hougan, everyone, thanks so much. Coming up, FTX US is entering the red hot NFT market. The competition is heating up.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The NFT marketplace is heating up. U.S. crypto exchange Coinbase is launching Coinbase NFT, which will allow users to buy and sell Ethereum-based digital collectibles. And the announcement comes just a day after rival exchange FTX US announcing a marketplace for Solana-based NFTs on Monday, with plans to support other blockchains, including Ethereum, in the future. Joining us now is FTX US CEO Brett Harrison. Hi there, Brett. So it's getting quite crowded and competitive in the NFT space. Is this, I guess, is it the concern out there? Is this a bubble or is this serious demand out there?
We do see incredible serious demand out there. You know, earlier in the summer, it did seem like NFTs had entered some kind of a bubble. But at this point, it seems like there is true staying power to NFTs. You know, at this point, over $10 billion worth of NFTs have traded in the secondary market across all blockchains. Over $1 billion worth of Solana NFTs have traded, even though Solana NFTs, as you know, a hot item for the NFT market out there, have only really come onto the scene in the last couple of months. And every day we see dozens of new projects of NFTs getting released, and we don't think that this is going anywhere. You know, NFTs themselves right now have a mix of different applications, and in terms of where you see a lot of the trading volume happening, they're more in this sort of collectible type space with, you know, primarily artwork. But there are so many different possible applications for NFTs, and we're just starting to scratch the surface. You know, for example, NFT gaming is going to be an extremely hot area. And as marketplaces develop, like FTX US, as regulated, safe, controlled environments for people to be able to actually engage in this market in an easy way, just as easy as they would with the spot crypto market, it's going to make onboarding those new kinds of applications for NFTs in the future just all that much easier.
So Coinbase and FTX kind of released this NFT product sort of within days of each other, but there's one critical difference in that Coinbase is an Ethereum-based NFT, and you guys are doing a Solana-based NFT. Can you explain the logic of that? Why did you guys choose Solana?
Sure. So yeah, we saw that Coinbase also released in their intentions to later in the year or early next year have their own Ethereum-based NFT platform. So FTX US intends to be able to support multiple kinds of blockchains, primarily Solana and Ethereum for NFTs. That's currently where the two hottest markets are right now for NFTs. But we wanted to start with Solana because there are a lot of aspects to the Solana blockchain that make it a lot more palatable for hosting an NFT market. If you look at OpenSea, which is an Ethereum-based primarily, it supports other blockchains as well, NFT market, all of their transactions happen on-chain. So things like listing an NFT for sale or bidding a new bid on an NFT are all actual blockchain transactions, which means each one of those incurs gas fees on Ethereum. And that can be quite expensive. You know, even to just list an NFT for the first time can cost you $25, $50, or $100, which is a significant upfront cost for someone to put an NFT out there. Whereas, you know, on Solana, it's ostensibly free. And one of the benefits of FTX US compared to the other marketplaces right now, including the one that Coinbase is proposing with their external hot wallet system, is that we are a centralized exchange, which means all the transactions that occur are primarily happening off-chain. And so we don't have to worry about things like this time it takes to actually confirm a blockchain transaction or worry about gas fees on Solana or Ethereum. So I think for us to enter the Ethereum market as well, hopefully in a couple of weeks, and be able to offer bidding, different kinds of price discovery mechanisms for Ethereum-based NFT auctions, and not have to worry about the different transaction fees and times taken for the Ethereum blockchain will be a huge benefit for people looking to have a more, let's call it, traditional style trading experience on NFTs that's similar to they would with spot crypto.
Brett, I could talk NFTs all day. Unfortunately, there's so much other news happening as well. So I've got to ask, what's your reaction to this potential Bitcoin ETF coming to market? And on FTX US, did you guys see any action in the futures market prior to over the past week or so from institutions that may take that may have an ETF hit the market next week in preparation for it?
So we at FTX US are extremely excited about this potential for a Bitcoin ETF, in this case, the ProShares and Invesco futures ETFs. We think this is an incredible first step for the ETF market being available to ordinary investors. And futures are a very good place to start for this. Futures, as was said earlier in the program, they're a great place for price discovery, but they also have a very orderly settlement process where the daily net asset value of a futures-based ETF is based on the settlement price, let's say, of the CME future each day. And there's a very well understood, highly regulated by the CFTC, a highly efficient price discovery mechanism for these settlement prices. And so we think that is a great start to get into the ETF market. FTX US just recently closed its transaction of acquiring LedgerX, which will give us the CFTC licenses to be able to offer our own futures on Bitcoin in the US. And we think that hopefully, we will be able to someday have, an ETF based on our own futures as well. More volume trades in derivatives globally in Bitcoin than spot. So we think as it just makes a lot of sense for the first foray into Bitcoin ETFs for these to be based on futures.
Right. Just one last question I wanted to circle around. Since you are focused on an NFT marketplace based on Solana, there was a network failure, and that's pretty unfortunate for blockchain protocols. So I wondered, was there any concern around the security around Solana?
We definitely have no concerns around the security around Solana. The downtime that occurred about a month ago, it was resulting from a network congestion problem that was immediately addressed. We know the Solana devs and the whole team extremely well. They're some of the most talented developers on the planet, in my personal opinion. And like with any software, there are always issues and growing pains. And I think the fact that there was an outage with Solana is more a function of the fact that so much more is happening on the Solana blockchain than anywhere else, because Solana actually can support a huge amount of transactions per second. It has extremely low fees for doing transactions. And so as a place to host all sorts of applications, it's one of the most viable blockchains that's out there.
All right. Well, thank you very much, Brett. Appreciate your time. That was FTX US CEO Brett Harrison. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, October 15th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Korea's much-debated crypto tax has emerged as a critical factor in the country's presidential election, slated for March of next year. We're going to talk about that and a whole lot more, and why a whole bunch of young people are getting on board to vote. Coming up, let's get you up to speed from Asia to the world. First up, taxing crypto in South Korea is expected to be the critical factor in the upcoming presidential election next year. Strong contenders from both political parties are saying the crypto tax should be pushed back. And why is that? Well, they're eager to secure the votes of the 20 and 30-year-olds, which make up 26% of the 51 million population of South Korea. They are, after all, the future, and how they vote could decide on the future of crypto in South Korea. Forecast News' Danny Park reports.
Many investors are strongly opposed to the crypto tax, saying it is unfair as the threshold for stock gains is 50 million won, while it is only 2.5 million won for crypto. Moreover, the crypto tax is counted from January, while stock gains will not be taxed until 2023. In response, lawmakers from both the ruling and opposition parties have spoken out, with several spearheading bills to push the start date back. According to various media outlets, both parties want to earn the votes of those in their 20s and 30s ahead of the presidential election in March. Around 60% of Korean crypto investors fall into that age range, with their stake in virtual asset investments much higher than that of other age groups. Back in May, Lee Jae-myung, the presidential candidate for the Democratic Party, said the crypto tax should be applied fairly with stock gains tax, while Hong Joon-pyo, a member of the Conservative Party who announced his running for the election, also recently criticized the tax policy on his Facebook page. But is there really a chance for postponing the crypto tax?
여야 모두 지금 과세 유예와 세금 부담의 경감에 대해서 주장을 하고 있기 때문에 충분히 가능성이 있다. 저는 개인적으로 이렇게 보고 있습니다. 더군다나 내년 선거하고 또 맞물려서 말씀드린 것처럼 앞에 형평성에서 더 문제가 있는데 게다가 이제 그 선거가 맞물려 있어서 여야 모두 이제 표 떨어지는 일은 할 수가 없기 때문에.
Professor Cha also added that the 4 years of building tax infrastructure for virtual assets is far from enough, given it took the authorities 17 years to build a tax law for listed stocks. For Forecast News, I'm Danny Park.
Meanwhile, China's crypto mining crackdown continues. This time, the finger is being pointed at those using public resources to mine. The Cyberspace Administration of Zhejiang says an investigation identified 184 IP addresses associated with 77 public entities that they suspect of using public resources to mine cryptocurrencies. Forecast News' Timmy Shen has more.
Authorities in the eastern province of Zhejiang began their investigations in early September, aiming to crack down on those using public resources and state agencies, state-owned enterprises, and schools to mine cryptocurrencies. On-site inspections later confirmed that 119 IP addresses from 20 public entities engaged in mining cryptos, including Bitcoin and Ether. And it's not just Zhejiang province that is carrying out such inspections. Earlier this month, the eastern province of Jiangsu said it identified just over 4,500 IP addresses that were involved with mining, with a total hashing power surpassing 10 petahashes per second. Authorities there said that involved power consumption of around 260,000 kilowatt hours per day. For Forecast News, I'm Timmy Shan, Taipei, Taiwan.
And finally, while China's crypto mining crackdown is showing no signs of letting up, rollout of the ECNY continues to pick up the pace. According to the China Civil Aviation newspaper, Beijing Capital Airport is the first in the country to accept the digital yuan with payment for parking spaces and purchases at over 100 stores. The latest move forms part of the plans for next February's Winter Olympics CBDC pilot. Now, the games will be the first international test of the digital yuan, with tens of thousands of athletes from around the world set to participate. Of course, we're going to be watching to see whether they cross that line in style or stumble at the last minute. Either way, they're headed for the finish line. Stay tuned. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Let's check in live with Bitcoin. The CoinDesk Bitcoin price XVX index trading at $59,825. Bitcoin up almost 4% over the past 24 hours. And the CoinDesk Ether price ETX index is at 38.01. ETH is also climbed about 1.8% for the day. And the new DFX CoinDesk's DeFi index is at 597, angling for that $600 resistance level, up just about 15 basis points. Joining us now to discuss the crypto markets is Omer Ozden, CEO of RockTree Capital, a New York-based merchant bank. Hello there, Omer. Thanks for joining us. So give us your quick take on the crypto markets outlook amid this ETF, but also amid China's crackdown. And you are also, viewers note, heavily involved in Asia.
Hi, Christine. Good morning. I think that it's great to see you on a green candle day with Bitcoin approaching the highs that we saw in May. I think this is a reaction, obviously, to the rumors about the ETFs being approved by the SEC, but also we had validation from other world leaders, including Vladimir Putin, talking about cryptocurrencies being accepted as potentially as currencies and so forth. And I think also there's a lot of enthusiasm in other areas, other markets as well. And I think that the FUD surrounding China is not as bad as it was initially thought to be back in June, July, and recently in September.
Can you talk to us a little bit more about what's happening in the Chinese market, given that you do a lot of business with Asia? Is trading still happening in China to the same degree? I know it's kind of a black box, but ostensibly the Chinese government is closing a lot of the loopholes for trading. OTC looks like Huobi OTC looks like it's going to basically shut down at the end of the year. What are you seeing actually in mainland China in terms of crypto trading?
Okay, so I think it's really important to put things in perspective. A lot of people were reporting that Chinese government is against Bitcoin mining back in June, July. And that's simply not the case. It was actually related to an NDRC policy that was issued in June 3rd, saying that the country had to conserve energy. And that was clear across. And it wasn't just related to Bitcoin. And we see that today in September, October. You'll see brownouts in various different industries. And of course, Bitcoin mining was one of those vertical industries that got impacted. In terms of crypto itself and trading with the exchanges, definitively things have changed. We do have specific regulations related to exchanges. In 2017, there was also similar types of policy. Some exchanges in 2017 in China shut down, like BTC China. It's no longer there, but Huobi OKX stayed. Binance went offshore, and you have some of the largest exchanges in the world from that time. Today, I think you're going to see the same thing, which is on the ground, exchanges are shifting towards moving more offshore. That's definitively happening, particularly moving to Singapore and Dubai. However, a lot of the clients that are being onboarded are offshore as well. And so the volumes continue. Another trend that we see, and that's with respect to centralized exchanges, another trend we're seeing is more move to DeFi. So one of, full disclosure, a project that RockTree invested into, DYDX, which is a decentralized derivatives platform, was doing about $10 million of volume last summer per day. Today, it's around $4 billion to $5 billion per day. And last week, it hit $10 billion, which is, in terms of volume per day increase, that's 1,000x in a little over 14 months. So the expansion of a lot of protocols decentralized into Asia is an important part of the development of how the users of exchanges are actually trading crypto. It's not just centralized, it's also decentralized.
So, Omer, looking ahead, should a Bitcoin ETF get clearance from the SEC? And again, we don't know. We won't know until next week if it is the case at all. What changes for the way you invest in companies and projects, et cetera? And what do you think happens, DYDX, as you mentioned before, what do you think happens on exchanges like DYDX? Will you expect any more volume, less volume? What do you think will happen there?
I think what you have to do is not skate to where the puck is, but you have to skate to where the puck is going. So the metrics I just listed clearly outline the direction the puck is going. And I think that with respect to ETFs, that's a great thing. That's a great entree for traditional investors into cryptocurrency market to get exposure to Bitcoin. But what we're seeing, more so in the West than the East, but what we're seeing is actually a lot of institutional investors who are looking to move into blockchain and cryptocurrency, moving straight to DeFi. So they're typically the gateway has been Bitcoin, but that involves a considerable amount of speculation and so forth. However, DeFi are financial primitives that the financial institutions understand. So yes, Bitcoin ETFs will definitively help more institutional adoption into crypto. However, it's already happening through DeFi because the institutions understand the basic financial primitives that are now building on this DeFi infrastructure on various layer ones. And with respect to Asia itself, I think that a lot of the users want to retain custody. They don't want to trust centralized exchanges because there are political uncertainty, because there may be regulatory uncertainty, plus sometimes bad actors too. And so I think DeFi also satisfies that concern and demand by the users.
Omer, just listening to some of your talking points there, I mean, you said China has an aversion toward Bitcoin or cryptocurrencies in general because of the energy arguments. But another talking point we've been hearing is that they also want to make way for their digital yuan and make exclusive use of digital currencies based on their digital yuan. I wonder if there's any credence to that line of thinking. And also, if that is the case, is that why we're seeing such a huge rise in DeFi platforms like MCDEX, like DYDX, and per protocol? Is it because that, they, as you mentioned, political uncertainty around these centralized exchanges, so they just want to get into DeFi?
I want to make something clear that the Chinese government is not against Bitcoin itself. It's when certain aspects of different industries hit the red lines. And in blockchain, I would argue that actually, in some respects, China is the largest regulatory sandbox in the world. That's what's allowed 70% of the hash rate, prior to July 1, emerge in China. The largest exchanges emerge from Greater China. So in terms of what the government is definitely for blockchain, more so than any government globally, arguably.
But only their blockchain, as in their digital yuan, not others.
Well, I think that there's a real interesting wisdom amongst the Chinese government that they understand that nascent technology, you do have to let it grow organically as it gets larger. But I think that in terms of the digital eCNY, this is not a competitor with Bitcoin. This is not a competitor with Ethereum. Perhaps USDT and certain stable coins, the use case itself could be seen as a competitor, but the eCNY is centralized. The people who use the digital yuan, which is growing, it's approximately 22 million users so far, but it's grown to 9 cities across China. So it's growing rapidly, I would say. Those aren't the people who are using USDT. Those aren't the people who are degen on Ethereum and Solana and so forth. So there's not a competition there. And I think the Chinese government recognizes that, except for perhaps stablecoin and USDT. China.
Omer, we'd love to talk further on this, but we have to wrap it up there. But thank you so much for joining us. Appreciate your insights. That was RockTree Capital CEO Omer Ozden. And that's it for First Mover. Thanks for joining us, Emily Parker and Lawrence Lewitton. You're watching CoinDesk TV.